So this is what happens, this is how we do it when we can use that the tax tables. We may not be able to use the tax tables, or I believe you have a problem that where you can use the tax tables, but they want you to do it both ways. Use the tax rate schedules as well. So let's actually, I'm going to keep this up here, and we'll use this, I'll use this as an example of the difference between the two. It shouldn't be much. If you're doing both calculations and you're getting a big difference, like more than $10 or something, then there's probably something wrong. Okay, so total was 88,028, and the liability was 67.99, and this was with the tables. So let's use the tax rate, what do they call it? Schedule. Schedule versus table. There must be a difference in definition. So that was Appendix D to get the table. To get the, and there are quick jump tos on Canvas too to get to these appendices as well. Hopefully you can open them up, if you can do this, open up several tabs so that they're there already open for you when you're doing the calculations on your homework. So you don't have to jump back and forth and back and forth. And if you have more than one screen, that's even more ideal. Appendix F. All right, these are the schedules. Now you'll see, they look they're similar to how we calculated withholding with the percentage method tables. Not exactly, but pretty similar to that. They are, you have to find, so for the tables, you had to determine the taxable income first. In this one, you've got to figure out what the filing status is first in order to choose the right schedule. All right, so for these folks, they were married filing jointly, right? And this was their total income, was 88,028. And we had to subtract the standard deduction, which we have to do when we're using the schedules too, to get to, what we want to get at is what our taxable income is. So that was 27,700, which meant our taxable income. All right, so I'm going to do this again. 7, so 63,28. Is that right? Okay, so our taxable income is the same, regardless of which method we're using. And we don't have to use the schedules with this one because their taxable income is under 100,000, but I just want to show you the difference between what the results are. All right, so let's find our correct tax rate schedule. Married filing jointly or qualifying widower, first one right there. Again, we've got a range of income. Taxable income, and again, we're talking about taxable income, not total income. I know I'm driving that home and I'm beating that dead horse, but for a reason, because students will get tripped up on that. Still, they'll be in chapter 8 and they're still getting tripped up on it. So, so taxable income is over this amount, but not over this. So here's our bracket, here's our range. And ours, 6328, that's between 22,889 and 89,450. They give you the calculation right here. There's a couple parts to it. First part is they just give us this 2,200. What is that 2,200? That's our first bracket.
Yeah.
That fills up our first bracket. Same thing happens for all of these. The 10,924 already just does the calculation for you for the first two brackets. All we're doing is adding on top what the additional amount is. So that's what this is. So like down here, 186,601.50, that's all of these brackets. Whoops, to fill up all of those brackets. And then any amount over that is 37%. Okay, so 2,200, so what we can do is just set that number aside. 2,200, so we don't have to think about it. Plus 22% of the, no, I'm sorry, 12% of the excess over $22,000. So now we're gonna have to figure out, we're gonna subtract 22,000 from this number, because this is the excess of this over this. All right, 328, 538. Okay, 328 is the excess over 22,000. Now we got to multiply that by 12%. All right, so times 12%. You guys are gonna have to help me here because I can't do this in my head. I can do 10%. I mean, I could probably figure it out. Take yours.
4,599.
599. What was the first one?
4,000.
45.99.
Yeah.
All right. Now we're going to take that. We're going to add it to this, to that 2,200. So 45.99. 67.98. Oh, it came out exactly.
0.36 on the 45.
Oh, 0.36.
Yeah.
All right. But that's pretty close, right? There are going to be instances where there's a little bit of difference, and I think the example in your homework is a few dollars, like maybe 3 something and some change. And normally, yes, you're right, you are going to get your answer using the schedules is going to have a decimal. This is going to be rounded. Now, the thing is, when you're actually doing the tax return, they don't use decimals on the tax returns. Everything's rounded on that tax return. Okay, so if you're figuring out how much to withhold from your paychecks, make sure that at the end of the year, it's 51 cents. So you can round it up those 49 cents so that you get that extra, or just round it to $1 every single time. Okay, so there's one. Let's do another one. Let's do one that's over 100. Let's do something ridiculous. Okay? Let's do, and we'll still stick with this total income. So you guys are going to have to help me with the math here. Or you guys can give me some. Give me a filing status that you want to use.
Single.
Single. Okay? Total income. Throw a number out.
500,000.
500,000. Okay, so this is our total income, so we have to subtract our standard deduction, right? So for a single person, what is our standard deduction?
13,850.
Yep. I'm not gonna help us too much, but it's better than nothing, right? So 150,
486.
486, 150. Here's our taxable income. Now, we know we cannot use the table, because that's well over $100,000. So we'll go to our schedule, but we don't go to this one, because this is married filing jointly, or qualifying widow, or widower. Stop, yes. Now we're gonna use single. So 486, 150, you see that the numbers are different, right? The brackets are different. So for single, we're only going up to 11,000 here. Before it was 22,000. So when you're single, you jump into that next bracket a lot faster. So single, we're at 486, 150. That's between 231, 250 and 578, 125. So let's set this one aside, 52, 832. Set that up there, we can forget about it for right now. Plus 35% of the excess over 231, 250. Now again, this 52, 832 represents all of those previous brackets. So we don't have to do the math on it. Thank heavens, right? I mean, you could put together an Excel spreadsheet and do it pretty easily, but, all right, I know that's 900. 5, 4, 25, 254, 900. All right, 254,900 times 35%.
89,215.
89,215.
Yep.
All right, then we're going to add that to this. 7, 4, 0, 12, 8, 13, 14. 142,047. What's their average tax rate? Remember how to do that? Remember our average? We'll take the B. We're going to take our tax liability divided by our taxable income. So we know they're in the 35% marginal tax bracket with their income because their last dollar fell within that. Their last taxable dollar fell within that. So here, their average, that looks terrible, ABE. So, tax liability 142,047 divided by taxable income 486,150. How much is it?
29.22, if you want 2 decimals.
29.22%. Still pretty high. Hopefully at $500,000 of income, maybe you've got some itemized deductions that are gonna exceed your piddly little standard deduction there relative to your income, or maybe you've got some adjustments or something. Maybe you don't. Right? But, and don't forget, so $142,000, that's just income tax. That's just federal income tax. And they got state income tax. They got social security tax. They got Medicare tax. They're paying property taxes. I don't feel too bad for them, but, you know, I don't know what their lifestyle is like. That might not be enough. Who knows? You want to do another one? Or are you okay? Anybody? You having fun? Okay. We'll do one more. I'll let you guys give me the numbers. And the filing status. And we'll do this total income again because it's good practice. All right, filing status. Let's do head of household, okay? Because that's the one that's different. The other ones are all the same. So I'll give you that, but tell me the total income. $170,000. Okay. All right, so what's our standard deduction as head of household?
$20,800.
Okay. And we'll talk about in the next chapter how we define head of household and single and all that stuff. It seems like it would be easy. Not necessarily. It seems like it would be clear cut, but don't forget, this is the IRS that was formed by the federal government, so it's not going to be clear cut. Okay, so 200. What do we have? 169. No, I'm sorry, 149. 149, 200 is our taxable income. All right, so let's find our married, filing jointly, or qualifying widower. Oh, we had married filing separately. We could have done two. Here's head of household. All right, so again, our brackets are different. Look, we go from 0 to 15,700. It's not smack dab in the middle between the two, though, is it? Between 22 and 11. I don't know how they. Who knows? Okay, so we got our standard deduction. We got our taxable income of 149,200, which is between 95,350 and 182,100. So 14,678 plus, put that down, 14,678, 24% of the excess over 95,350. So we're going to subtract the 95,350. And 8, 11, 5, 8. Tell me if I'm wrong, because sometimes I do this 2,000. 14 minus 53. I get that right?
Yeah.
53,850. So 24% of the excess. That's why I picked 24%. What do we get?
12,924.
12,924. add that. Um, 16, 7, 27, 6, 12. Did I get that right?
602.
602? Tax liability. All right, so what's our average tax rate? What are we gonna divide it by?
Taxable income?
Taxable income, which is the 149,200. What do we get?
18.5.
18.5? 18.5%, or average tax rate. Marginal tax rate is 24%. Questions? Not so bad. All right. Let's see. Oh, I don't
That
want
makes sense now. We'll see what we get when we do
to-
homework.
Okay, well, you'll have the recordings, which hopefully I can get up tonight. You can refer to, and of course you can ask questions. All right. So these are just different, I'm not gonna go through this because it's the same, I just did my own examples. And we went through that as well. All right. And these are tax. Okay, so this is not learning objective 1-3. Because we already did 1-3. I don't know what this is.